The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it's a wonderful day here at TFNN. As always, we meet from 2 to 3 every trading day. And it's been a while since we skipped a day. But we're going to get ready for a vacation here just before Christmas and through the first of the year. But until then, we'll be here every trading day. And, of course, we've got some real action today. We're having a little bounce off the lows. We got to a low of 1779 on the S&P cash today. When we look at the volume, actually picked up late into yesterday. That volume pickup has pretty much been going through what we've been looking forward to, which is some energy to the downside. 2.3 billion shares as we start the show on the consolidated New York Stock Exchange tape. So we do have energy, and it is to the downside. We had a rally attempt kind of early in the morning. That is fizzled. What will really be interesting is to watch the sell-off, if any, into the close. We've got a lot of news going on, but we'll get to most of it here in just a little bit. But a little bit of action in this market. Just make sure and update it. Just so we're right. I think we're trading out here at 1785, which is off 10 points from yesterday. Of course, the big thing was a lot of technicians would have picked 1795, a close below that as a signal. They were able to push the market up just a little bit, so black boxes wouldn't start selling instantly in the morning. Of course, we had a little bit of a sell-off, tried to rally, pretty much defeated that rally, and energy has been coming in, especially to the stocks that people were watching that weren't at all-time highs. Ones that people might elect to sell and take losses on are probably the ones being affected the most in a broad brush approach. The Hour of Power. Yeah, so we can say, maybe I need to change the name of it, the Hour of Power. And I'll lay hands and swing a snake around my head to make prognostications. But it is an interesting day. Of course, gold up about $25 at 1245.60. For those folks that have gotten the Art of Timing the Trade charts, a subscription, every morning we also give you a PDF with all the charts in it. And of course, there were a lot that were setting up with Gartley patterns over the last few days, and of course a lot of these stocks, we'll look at a couple of them. I started to look at a few yesterday. Had broken their lows on lighter volume, so probably not inconsequential. We're getting a little bounce out of here today. My guess is, though, we're still looking for one more deep blowout, bloodletting kind of thing, but a tiny respite for those people that have been trading for a while. On this day in 1991, Charles Keating Jr., the kingpin of the savings and loan crisis, is convicted on 17 charges of California state securities fraud. The former chairman of Lincoln Savings and Loan is found guilty of making false statements and omitting disclosures about the risk of the junk bonds that were that he sold to more than 17,000 investors. Many of these were the widows and orphans kind that didn't really have a chance. He sought out the weakest investors that knew the least. These bonds sold for roughly $250 million and turned out to be worth about a 3 to 5 cents on the dollar. Pretty horrible time, but of course we made it through there fairly quick. New laws were constructed, and of course, the name of the game just changed, and 15, 17 years later, right back into another housing crisis, which pretty much the same thing. If we want to talk about LIBOR, I'm actually saying it as LIEBOR. Almost non-existent reporting of this is kind of interesting. A group of leading European and American banks will find a record 1.7 billion euros, which is about 2.3 billion by European Commission, for the rigging of the interest rate benchmarks. I don't know if that's officially been put out, and I thought it was supposed to come out today. Haven't checked on it later. But I don't know if that's a drop in the bucket or if they still came out smelling like roses. But 1.7 billion with all the interest rates, boy, it could have been a whole lot more than that, don't you think? But I'll have to look into that further, but at least they're being penalized somewhat. Australia adopts the ostrich theory. Interestingly enough, Australia has kind of the same problem we have in that they have a debt limit, and their parliament has to approve that debt limit. What they did was make a giant deal so that no one has to know just how much money they're spending anymore. And several people claiming that that's exactly what we should do here. Boy, I can't think of anything worse than not getting a reminder like a statement for your credit card saying how much you are in debt. I think you should always constantly be reminded of it. And the only thing I can think is they don't love their children because they're going to be leaving that monstrous debt to their children. I guess they just don't care. But that's me. I have far fewer descendants than most people, but I think that we deserve to leave a better country and a more fiscally sound country than we had before, and not try to use everything up for our country's futures just because we want to spend some money now. But looks like Australia is headed that way. Apple's fingerprint sensor, not getting much movement in this so far today, but it is a real issue that's starting to come up on a lot of the blogs for Apple. They are off about $2.50 at $563.78. We're going to get a little bit more into, well, I guess I'll do it in this segment here. But the capacitive sensor is made of raw silicon, and it tends to be very fragile and susceptible. So what they've been doing is putting a layer of sapphire crystal on top of it. We've talked about how important sapphire is going to be in the near future. But there's a few reasons why this can go south. But you would think that a fingerprint sensor, especially from Apple, should be a no-brainer. But they're having to start to educate people on how they actually use that fingerprint sensor. And it's somewhat interesting, but it is problematic. I'm not exactly sure how many units are affected, but apparently the raw silicon underneath the sapphire are starting to have problems in some phones. So we'll just keep an eye on that. Today, the big thing that's moving it is a giant BS story about Apple in China Mobile and them getting the green light to actually start selling phones. Even if they started to try selling phones today, the biggest problem is that the cell towers don't exist. So they're thinking that in March or April, maybe Apple would be allowed to actually start selling their phones in China. I've talked about it for a while. If you do business in China, they're going to actually bend you over and make you probably give just about everything you can. And you will feel very bad when you leave the meeting. They don't allow you into their market unless they get something huge in return. And my belief is that they're not going to let Apple in as long as the code base is not is not there for people in China to peruse, thinking that, of course, the CIA's infiltrated them, or the NSA, and anybody using one of those phones could easily be snooped upon. They actually, China Mobile, which is the biggest carrier over there, uses a thing called TD-LTE instead of the FDD LTE standard in the rest of the world. And it's somewhat problematic. We talked a little bit about Qualcomm making so much money and why they've been doing so well. They made a special chip that even did this special China weirdo standard, even though they can't sell their phones into that market at the moment. But every iPhone 5S does already have that chip in it that would be usable with that FDD standard, or is it TD? Well, I can't remember which standard is which right now. But it is, I still have a feeling that people have been talking up stories about Apple for the last year. It was all about them getting into the streaming music business last year. We've seen that come to a crashing halt. It was all about Apple TV because they were going to get in that and redefine music. That didn't happen. It's all about them getting into China now, which is not going to happen. And I think that's kind of the story when you see a very manipulated stock, at least from the PR standard of it. Of course, they're doing extremely well with tablets right now. And the big issue is people and whether or not we've hit the top of the market in tablets for a while. There's a great amount of surveys coming out, especially with people in the Best Buys and finding out what consumers are buying. And it seems like the tablet sales not quite what everybody expected them to be, especially with females. They are tending to buy a lot of these phablets. That's a PH instead of a T. Large phones, so they don't have to carry yet another device. So they want a phone that's big so that they can do tablet-like things, but also be a phone so they don't have to pay a second service charge to get the internet on those. And with probably even the majority of women being tablet buyers out there, kind of cutting into a lot of the tablet sales. Of course, Apple likes that because they make more money selling phones, but at the same time, they don't make really phablets. There is a lot of rumors about their product coming out in the spring that will be a 6-inch device. But enough on Apple. We'll be back in just a few minutes. You can email me at path@tfnn.com or 877-927-6648.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Interestingly enough, of course, Monday everybody was talking about drones. Last night, Sammy Kamar, which is a well-known hardware and software hacker, built a drone that will hunt down and attack others as it flies, taking over those drones and actually creating an army of zombie drones along the way. So I'm wondering just how far this whole drone discussion is going to continue on. But the technical details are it gets the MAC address, which is the Internet IP address of all nearby Wi-Fi devices, and one belongs to a block of addresses used by Parrot drones. It forces the craft to disconnect from whatever's driving it, and then allows the hacker come flyer to take control. So I don't think people in the government expected it took so long to get the website up and running, but only took a few days for someone to actually hack something together to actually take over and control a lot of drones, which gives you kind of idea of the ingenuity out here in the United States. But I thought it was kind of interesting that it only took a few days to go out there and find out that the rise of the machines is not that far away. And what else do we have? Amazon said it sold more Kindles between Black Friday and Cyber Monday than ever. Unfortunately, they never tell you if it was one more than ever, or it was huge, or it was different. And they haven't really since they started talking about Kindle sales. I suspect that they were fairly good, mostly because Black Friday sales had the Kindle HDs down to $100. You can still buy them at $115. The question is, it costs them about $178 to build those. Plus, let's give it $5 for shipping and handling. Boy, they've got to come up with about $80 worth of sales to break even. And the question is just how many people will do that. I think that they've hopefully made a good business decision thinking they can. Maybe it was one of these deals where they just thought it was better to blow out the existing product than to hang on to it and let it age, which is probably not a bad idea, and especially since they think that they're going to get more cash back since they have their own quote-quote app store. But interestingly, nonetheless, new home sales in October were seasonally adjusted annual rate of 444,000, and it's up 25%, most likely because interest rates look like they're going to spike. Most people are looking at that 3% on the 10-year and expecting it to break through on Friday. And it'll be rather interesting to see whether or not we actually get that. But most people are thinking on the numbers Friday morning, we're going to see a 3% 10-year in the bonds. I had a quick question in an email. Wanted to look at Xerox. Xerox actually one of the more bullish-looking charts out here, and as we look at that, they had a high out here on October 21st, $11.15, 11 million shares. Went above it, of course, with almost 12 million shares, actually. And the question is, what do you do with something like this? The energy certainly was very strong on this last leg up, but you do have a high volume low back here at $9.55. I would suspect with the market being somewhat weak, we're probably going to see the same thing. Of course, we're off about 8 points now. But as long as we continue to see a few chinks in the armor of a market that just will not pull back, I think we have a lot of stocks. I'd give the side to go ahead and sell Xerox. I don't think you're going to get that much out of it more, even if the market did move higher. Probably have everything that you're going to get out of it. You can email me too at path@tfnn.com if you don't want to come on the air. I'll be glad to answer your questions. But I like talking to people, so give me a call at 877-927-6648. That's 877-927-6648. We'll get into the rest of the stuff going on out here. Of course, crude up to, 1 month high. Starting to see some pressure on the refiners, VLO, Holly, Frontier, a lot of those. Maybe we'll get a chance to look at those before. And we're going to talk about insider selling, huge insider selling, when we come back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we're going to, is it Dennis?
Yeah.
I guess, yeah, okay. Good. It is Dennis or Pat?
Pat from Dennis.
Okay. This is the craziest I've gotten in a while here. I'm still going to decipher it after the show. What can we do for you today? What would you like to look at or talk about?
Yeah, what do you think about gold and silver, GLD and SLV? Is this a breakout or we got further testing?
No, I think we're going to get down here and test this low. Patience is going to be a virtue on this one. I was going to be surprised if it wasn't Friday before we saw 1,200. Maybe it'll be Monday now. But I think we're down here close enough. Maybe it'll take the numbers on Friday to get this thing down below $1,200. But normally gold in most commodities have some kind of huge washout, and then that's it. And even if we don't get any volume, I still am looking for some kind of huge bar out there minus the volume to settle low. And so if we saw something like in the GLD back on June 28th, where we had this huge candle I'm showing on Tiger TV and in the day.
Right.
if we minus the volume, if we have the volume of the last few days in the GLD, but a nice big fat candle like that, especially some kind of reversal signal like we had in June 28th. But this isn't a whole lot out here. This is a little bit of gold gas. Someone needed some vino or and acids or something out here. But to me, it looked like there's a good chance that we're probably just back into this little gap for a little while. Not bad, but I'm still thinking I heard the first rumblings of the end of gold today when I was watching the financial infotainment shows. And normally you're going to get a week or two of that. So,
okay.
Normally you get down there, people are asking it. I saw some articles this morning about Chinese people giving up on gold. And, those are all the precursors to finding a bottom in the market. But normally it's not the first day that you read those that it's over. It's yelling and screaming and gold's over and all that, and I just haven't seen it. And every time we've had a meaningful bottom in 13 years of me trading gold, it has always been met with a resounding blood in the streets, it's over, dogs living with cats, real wrath of God stuff, and gold's over. And I'm just not hearing any of that yet. The thing I would like to hear probably more than anything is people yelling and screaming at Tom at 4 o'clock because they didn't sell their gold and they're mad at him anyway, right?
That would be good.
Yeah, I mean, those are the kind of things where people are just wanting to throw in the towel. Normally you'll find he'll get like 5 or 6 or 8 calls in one show, and they'll all be saying, ready to jump off the building of the tall gold building. But the same thing you'll hear people talk about it in restaurants. You'll hear CNBC nonstop that, and even the last one made me think that we hadn't made a long-term low in gold. We came in and basically touched the very top of that June 28th low,
right.
At least in the GLD, and to tell you the truth, it's very rare in commodities that you don't have everybody come back in and just blown out of those lows if they were lucky enough to actually buy them at those lows. This could be one of it, but it's probably less than 20% are like that. So the odds are against you jumping in here today. I think there are some stocks, like I said, that were making Gartley patterns that would have some nice little bounces. Let's pull one up here real quick that came out of the Art of Timing the Trade scan last night. But, you got a few of them that were out there. But a lot of these just haven't quite made it down to their lows either
right.
to form and finish these Gartley patterns. So
okay.
I'll give you a free one here. Take a look at EGO.
Yeah.
But there were a bunch of other ones the last few days, but I think we still need just a little bit more out here. Again, these patterns are not bad. They're pretty much what we're looking for. In this case, we went through the X point of October 15th on EGO, and you wanted to have less than 9.6 million shares. You had 7.7 million shares, 6.2, you got 5.8 today, which is not bad. But you would really like to see one more heavy day of just maybe gap down, despondency, gold hitting 1,200, 1,180, or 1,150 for 5 minutes and then closing back at 1,200. I don't think there's a lot of downside here. So I could see people stepping in the way. I just think it's probably just a little early. But I don't know. Did you listen to Tom last night?
Oh, yeah, Tom's anxious. He's raring to go.
I missed the first 15 minutes of it, so I didn't hear what he had to say. But I figured he's chomping at the bit. But
he is.
I think this is. It's setting up beautifully. It's missing the psychological elements that I've always seen through every one of these. In fact, probably one of the biggest scores I ever had in gold was everybody in the den telling me how horrible a gold buy would be at that point. So even the people in the den ganged up on me. I think it was in 2006 or 2007. Everybody hated it, and I want normally these really huge pullbacks are always met with even the most ardent gold people saying it's over. So I just don't see that yet, and that bothers me. Although the charts look fairly good.
Yeah, I know Tom always used to get mad when he got a call on gold, because if he didn't get any gold calls, that was a good sign.
That truly is, and I'm sure he got a few last night. Probably going to get a few more today. We're getting awful close back in here. I could see people taking a chance out here because they're probably, if you believe the cost of production in gold is around $1,100 or $1,200, you're just not that much farther. I've just seen every kind of huge move. Let's think like natural gas. Natural gas was trading at like $15.75 where I shorted it for the top in it a while back. And everybody was just screaming about how it was going to go higher and everything else. But it went below the cost of production for a long time. And I don't think gold's going to do that as long as natural gas. But gold isn't something you have to have. Natural gas, you got to heat your house. So there's nobody consuming it. So
I can't believe it's even going up because they got so much of it, at the down at the bacon, they're burning it off, because it's not worth transporting.
Right. And, actually I have a story about that today. But interestingly enough, that's it. What I do is I TiVo the infotainment shows, and I fast forward them with the closed captioning on, just to see if they're, I don't want to hear too much of what they're saying, but I do want to fast forward through it, see what they're saying, but not be impacted by it. So I'll do that a lot and fast forward through it and read the closed captioning. And just not a lot of discussion about gold, not selling it, not buying it. There was a few mentions today about it, but normally it's wall-to-wall on CNBC, less so on Bloomberg. But normally when we start saying the end is over on CNBC, probably the time is going to be very close for buying it. And that I don't know how you quantify that psychological side to commodity markets, but it certainly has been my experience. I don't know. What do you think the mood is out there? Is it everybody's waiting for it to go down so they can buy it?
The knowledgeable traders are.
Yeah. So
they're all salivating, but everybody else is saying, gold is no longer a good investment, and the
where
place
have you
to
heard
be
that?
is stocks. On TV, Kramer. He's saying, keep a little gold, but even Jim Kramer doesn't talk about it that much. When it was going up, he was all, make sure you have gold, make sure you have gold,
Yeah, he never had it in his portfolio, I noticed. So,
really?
Yeah. I still have a feeling that maybe the Paulson trade is still out there. Maybe they're going to force him out. I think he kept 50% of what he had, so that's still out there. I'd like to see him have to cough up those shares to get out.
That would be good. I like Tom's logic, too, is they're going to close a lot of these mines because they're losing money, so they're going to close the mines. And then at some point, that will bring the production down. So, the best cure for a low price is low price,
Right, and of course,
that logic.
And of course, commodities always go to some astronomical level that's unsupportable and right back down to below the cost of production until they find the cost of production mean, and then they start moving back up again. So if you believe that whole story that the cost of production is somewhere over $1,000 but less than $1,200, which is normally what I'm hearing from most of the people in the gold community, I think Tom thinks it's $1,150, which is kind of the mean price. would make me think that that's probably my target, even if it's for 5 minutes that it's down there.
Yeah, I think he's kicked around 1180, 1190 in that ballpark.
Yeah, so you're going to see a little bit more of that cost of production
little excess,
level.
Yeah. Well, and then once they close these mines, they're not going to open them up again unless they can be assured that gold is on the rise and going to stay on the rise.
Well, I'm probably a little bit less believing in that. A lot of these mines are in third world countries, and all they care about is having miners working and not rioting and overthrowing the government. So I don't know if they're going to have them open, but the workers are going to probably be there sucking money off the mine. That's probably the worst part of being a miner in the gold business, is everybody's got their hand out, whether it's the government or the workers or the unions for the workers or the communists that run the country. Do want to take it over if it becomes too profitable.
Yeah, like Russia. Tom's always warning about mines in Russia.
Russia, yeah. You're probably more likely to be behind bars or in a gulag if you run a mine there and own it and are not in that country. So always one of those things to keep an eye on. Now I see a lot of charts. If they could just get a little bit lower, I see that we're in the top of that heavy bar, but just don't see it yet. I don't get the psychology of it yet. I see the charts look good, though.
Okay, thanks loads.
You bet.
I'll be patient.
Be patient. I think you got plenty of time out here. I think that they could bore people. In fact, I would love for it to stay down here for 6 months. And I know everybody wouldn't like it because they want to make money now. But I'd love to see this thing trade at $1,200 for like 6 months and really get ready to have a huge move. Because the next move is probably going to be from $1,200 to probably $2,400. And it may take a while to consolidate these losses out. And that would not be unproven. I haven't heard a lot of people talk about why it may make a low. It has to bounce instantly. It may go sideways for a while and drive everybody nuts. And, of course, if you're a patient trader, you love that, because as soon as everybody quits watching it, it's going to run like a scalded as one guy's dad used to always say, it runs like a striped-ass ape, which I never knew exactly what that was, but always interesting. Anyway, thanks for the call. Yes, patience is a good quality in a trader, but I think especially when I was day trading a lot and always looking to make some cash that day, it affected my ability to have any patience. I was always going out, tripping over a few bucks when there was a huge trade. If I would just wait and watch, probably that Netflix trade is probably the one that I've watched the longest, waiting for that 3-gap play out there. But they certainly are very good when you actually get it and get it set up. Of course, we've got a market moving out here, not sitting still for anyone. Just wanted to make sure, we're off 6 points. Always going to be people pushing on this market, buying every dip. But we are off 6 points with 2.6 million shares at the present time, so we'll continue watching that. I put on a couple of shorts over the last couple of days. I've got one that's flat. I've got two that I got one that's off a couple percent today. Got another one off just about the same thing, one flat. I'm about 30% short at the moment, and I think it's fine, but I'm not short the indexes. We'll talk about that when we come back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, interesting news coming out today. Probably the one that I thought was most interesting was with everybody up with natural gas, is the largest ship that's ever been built was launched this morning. It is called the Prelude, and it's headed off the shores of Western Australia, where it's going to be moored for the next 25 years. It is not only a ship that can store natural gas, but it also will process it. And it's owned by Shell, and it's going to be interesting. Measures 1,600 feet long, 243 feet wide, almost a football field wide, weighing 600,000 tons. Very interesting that something is moving just that fast. Of course, you'd think natural gas would get a little bit more of a pop, but of course, probably looking into numbers tomorrow to see exactly what the drawdown is. I also suspect that the opening of that pipeline down to Port Arthur is also probably making people think that maybe there will be a market to take off a little bit of the natural gas before it all starts flowing out of the upper northwest. But interestingly enough, what we have. So we're going to check in for the last minute or two. Out here, we've got a couple of minutes. This thing's been trying to bounce out here. Everybody, of course, wants to buy the afternoon bounce in the market. Probably the most interesting thing to me is the traditional technical analysis folks, more on Wall Street, would call any close below 1795. Probably a signal. Of course, we closed right there now. We're about 5 points under that. Not a huge signal, but I could see the market doing this all the way probably to the 15th or 16th of this month. Down 5 points, up 3 points, down 5 points. I am not short any of the indexes. I think there are some very low-hanging fruit in stocks. And a couple of them actually went back up, tested the highs today yet again that I'm short, and are back down. So I would probably say that if you got 1760 out of the S&P and the volume's still light, that's probably going to be somewhere around the lows for this month. But I think we're probably going to see extended selling of some of these stocks that have come off their highs with volume as we go into the new year, and people taking a little bit of risk off. Still, I'm thinking that no one's really discounted problems with the government and the rancor that it's probably going to go to a fever pitch, short of people going out and dueling in front of Congress and the Senate and congressional offices. I think we're probably going to get in for one huge year of discontent. And in the meantime, I think our foes across the way will probably try to take advantage of that. And we're probably going to see, I think, as the Chinese say with their curse, I hope you live in interesting times. I think we're set up very much kind of like just before World War II. Country trying to get back on its feet and trying to look the other way for a lot of these countries that would do us ill will. You can only do that for so long. Remember, sell when you can, not when you have to. We'll be here tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.